and even the net profits at 772 crores are slightly higher than street estimates.
Okay, we in fact have Mayuresh Joshi with us. So while Sonia is looking through all the fine print, Mayuresh, your prima facie analysis slightly better than what you were expecting?
Oh yes, so again, if you look on the EBITDA front, on the margin side, we are expecting numbers to come through at 14.7%. But again, I think better than those numbers. I think the cost reduction program under LEAP 20 is definitely working in wonders for Hero MotoCorp. But clearly, I think the other numbers to watch out for is the management commentary on how they are looking at the rural demand, planning through what about the export markets, because in the last con call, they plan to target export markets from the current 20 countries to 40. And again, the volumes thereof. So I think, yes, operationally better set of numbers than what we had anticipated.
Okay, operationally better set of numbers. I'm just trying to calculate what the realizations are this time around, Mayuresh. But given that, margin performance has once again improved for Hero MotoCorp, how do you think the stock will react tomorrow? Because, this is a stock that has been under intense pressure this year. It's down about 20% for the year. But this time we have seen a bit of an improvement in operational performance, and the management saying that Q2 was the beginning of a revival for the company. So do you expect the stock to see a consistent recovery?
So clearly, Sonia, I think the stock has moved up quite reasonably over the past few weeks and months on expectations of the benefit of lower commodity costs and the cost reduction programs to drive margin improvement. But clearly, I think the volume growth is something that one needs to really factor in, because in the last con call, again, I think they had expected the entire industry to grow at 3 to 4% in FY16. Again, the new launches that Hero MotoCorp was looking at, specifically on a scooter launch and a motorcycle launch over the next few quarters, that is something to be watched out for. What about inventory? It was close to 5 to 6 weeks as far as last quarter numbers as well. And clearly, I think, how do they plan their foray into the premium segments? I think all these factors would need to be closely watched out for. A detailed commentary thereof is highly desirable. But again, I think they were targeting cost savings under the LEAP program, close to 225 odd crores for FY16, 275 odd crores for FY17. So I think one really needs to understand all these numbers in greater detail. So yes, I think the stock will react positively, but again, I think the sustenance of the stock probably at higher levels, you might see some profit booking come through, because valuations again a tad bit on the higher side as far as estimates, around 15.8 times FY17 now.
Okay, just wanted to point out one more internal. The realizations for the company have gone up on a quarter-on-quarter basis by 2.7% quarter-on-quarter at 43,413 rupees per unit that they have realized, versus about 42,258 rupees per unit last quarter. So the realizations for the company have improved, and that perhaps is one of the reasons why the margin performance too for the company has gone up. So this is looking like operationally a good performance from Hero MotoCorp, at least better than what the street was estimating. And the management commentary also for now looks like it's quite optimistic. Festive season could lead to a positive sentiment. But let's get Rohan Korde into this conversation. Mayuresh, just stay on the line. Rohan, how would you react to these numbers? Margins better than expected. The top line also has not fallen as much as what the street was estimating. What would your reaction be?
Yeah, I think it's a very good set of numbers that they reported. We already knew that the volume was down 7% for the quarter, but as you said, realizations have increased quite significantly, and of course was the expectation of 15% EBITDA margin for the quarter. They have done 15.8%, so I would say that it's a really good set of numbers.
Okay, so what would your view be on the stock, Rohan? And given that the management has been able to execute its cost reduction program with quite a bit of success, do you think they can deliver better than this 15.8% margin performance in the second half?
I have an accumulate rating with a target price of 2840. As far as cost reduction program is concerned, yes, they have been setting targets and they have been benefiting from it. But we should also note that the gross margins have improved by 100 basis points on a quarter-on-quarter basis. So it's not just down to cost reduction. They have definitely benefited from the lower commodity prices as well.
Okay, so benefited from lower commodity prices as well. The other expenses figure for them has also fallen on a quarter-on-quarter basis. So other expenses have gone down to 777 crores versus about 782 crores same last quarter. So quarter-on-quarter other expenses have also fallen for them, and that's one of the reasons why their margin performance has been good. But what would your view be on on how the stock trajectory could be from here, given that the top line is still not growing? I mean, it's still a fall of 1.5% that we've seen in the top line. It's just that they're effectively managing their costs quite well, and we've seen commodity costs fallen as well. So given that top line is not seeing too much of a growth, do you think the stock upside could be capped?
I think the reasons why the top line growth has not really been good were already known. We had a delayed festive season plus insufficient rainfall in areas. So I think those reasons have hampered demand to some extent. We'll have to see how the entire festival season pans out and then take a call on it. But yes, you're right that it's a margin performance which is the most, which is the best part of this result.
Okay. All right, Rohan, we leave it at that. Thanks so much for joining us. Well, that's the word coming in. So just to summarize the numbers this time, Kritika, good numbers coming in from the company, better than what the street was expecting. The standout performance this time is the margins, 15.8% margins versus 13.5% same time last year. So that's a significant jump that we've seen in the margin performance. The realizations have gone up quarter on quarter by 2.7% at 43,413 rupees per unit, and the other expenses have also fallen. So it's an operational beat for the company. The only thing is that, on the back of weak rural demand, the top line has been impacted. So the top line is still down about 1.5%. But as the analysts were saying, that's something that has already been factored in by the street. I expect the stock to move on the upside tomorrow because it has, certain legroom on the upside. It's down almost 20% this year. So given that we've seen an operational beat, this time around, also another thing to watch for is the fact that the cost savings that the company has seen in the quarter gone by, they said that an additional 200 crores of cost savings is expected in FY16 because of the cost reduction program. So I expect to see some more in the quarters to come, and perhaps this operational performance beat will go down well with the street.
So all in all, if you look at the next couple of quarters, Hero has its growth in the right lane. All in all, it's right now fairly better placed than it was about a quarter ago in terms of the cost reduction drive, correct?
Well, yes, that's the operational performance. But on the top line, it has been facing quite a bit of a market share pressure. It's been ceding market share to Honda. In fact, in the quarter gone by, Honda has gained market share to the tune of around 27% versus 25% last quarter, and Hero has lost market share. So that continues to be the problem. But the management commentary, they say that the quarter saw the beginning of a sales revival. They are cautiously optimistic that the trend will continue in the second half of the fiscal, and the festive season could lead to a positive sentiment. So they are optimistic that things could get a bit better.
Okay, there's a lot more numbers that Sonia has to go through, so we'll let her go for it now. We'll have her back at 6 o'clock to take us through a more detailed analysis of what the management has to say. But let's take a short break on that note. Lots more up ahead. Stay tuned.